Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I really appreciate that. So I have already done my shopping for today because I was in the live stream with Retire on Dividends from 9 this morning until noon, and I just got back from lunch. So I was doing my trades online while we were in the panel together, and it was actually really cool. We got Howard to come on. David from Quest Funds was there at the very beginning, and so we got the live update of K-Yield, which was 0.165, and that's already on YieldMight, so you can go check that out. Anyways, so what did I do today? I am going to lose a lot of money on my XPX call spread that I did, but I thought I might try to do a call spread again on those, so we'll see how that works out. The reason why I did that is because I sold $1,000 worth of SLTY because it was getting to be too much of my portfolio. So I took $1,000 of that and I put it into a call spread. I sold a cover call to cover, well, my SPY Leaps is covering that. And then I rolled all of my puts for MSTX and Misty. I did sell also $2,000 of WNTR because it was too much of my portfolio. And so I bought 50 shares of YMAX. So now I have 100 shares of YMAX in this account. I bought 25 shares of Bitey, and then almost 10 shares of blocks. And I transferred over $852 from my retirement account. So I transferred over basically $400 each of MVYY and PLTW. So 4 shares, I believe, of MVYY and 2 shares of PLTW into my leverage trash account, which I'm excited that we're getting. My portfolio went up $3,000 so far today. I would love to see it closer to $100,000 this portfolio, but I am actively transferring assets out into my leverage trash account, so we'll see. But I do have now $17,000 worth of assets in my leverage trash account, and I did not have any money in here, so I didn't buy anything. Nothing I have pays on Friday night. So this will just be, well, YMAX should have paid. Anyway, it's fine. I don't have anything in my leverage trash account. And so in my retirement account, today the only thing I bought was I got into Fubo 100 shares, and I immediately sold a cover call on it. So later this week I will close this, hopefully. And I put it really far out of the money in the first place because Fubo is more of a growth play than it is an income play, but I don't have time for lazy stocks in my portfolio. So I also sold a call on Bitto, and I did my SoFi ladder. On the 400 shares, I have 3 contracts out on SoFi. And I'm not that concerned about getting money from Bitto or SoFi or even Fubo. It just, if it generates any income, that's what I need. And so when I transferred the $850 to my investing account, they actually took $50 out as a fee for the early, for like the matching. So I think I might need to wait for my Roth IRA's value to go up. That way I don't get a fee. And so we might not be aiding my margin account that much until that does recover. So, because I don't want to be spending, well, it's not really spending, but like They did have that 3% match, and I'd rather not have fees on top of the 10% penalty right off the top. So I think between all of the premiums I'm getting from my cover calls and the actual money I'm getting from my income from my income funds, I should be able to cover my bills for this month, which is good. Yeah, retire on dividends. He did ask me, like, how is retirement going? And, $86,000 is probably not enough to retire, especially with the amount of expenses that I have, but I'm making do. And I'm at the point where I have proven over the last 3 months that I can generate, at 70% plus yield while relying on it. So now I'm looking into getting into some more stable, lower paying stable funds, and hopefully I can buy into those at a quicker pace than I have NAV decay. So I am still putting my foot down on most leverage things that are not XBT. Like XBTY is Bitcoin related, so it can stay in my margin account, but it should be a very small portion of my portfolio, like 5% maybe. MVYY and PLTW still need to get out because those are leveraged and single stocks. And so I'm pretty comfortable with having my margin account like half gold and commodities and half Bitcoin and crypto related, and starting to put in little like fund of funds that are not leveraged that pay a lower amount, but overall might have price appreciation over time. And I'm also doing more options collateral because I don't get charged the interest, which is pretty low, but I don't get charged the interest. It helps me with my margin buffer, like not getting margin called, and I can generate more money. So the SPX, I haven't been doing those because I haven't felt comfortable with them, because call spreads, if the trade goes like really, really bad, I could lose like all $1,000 I put into this trade. So we'll see if I even win my first bet going back into the ring with that. I'm much more comfortable with the leaps and just selling puts. That way, if I lose the bet, I can just own Misty. If I lose this bet, I can just own MSTX and then sell a call on the 100 shares that I just got. So that's where we're at with all of this. One of the more interesting questions that we got, and I believe I've covered this before, but it's good to reiterate, but why would you be in a high income ETF if you could just sell your own options? And for me, there are several answers to this. There's only I have, $90,000, we'll say. Let me get a spreadsheet out so that we can go through numbers and it makes sense. Okay, so, and also let's make this bigger so maybe you can see what we're doing. Okay, so let's say we have a portfolio value, and we have a $10,000 portfolio, we have a $50,000 portfolio, and then $100,000 portfolio, 200,000, $500,000. Like as you go up, a $1 million portfolio. Okay, is that enough zeros? I think so. Okay, so, and we'll format that so we can actually maybe see that currency. Okay, so we have a portfolio value. So a single trade, a single trade should not be more than like 5% of your entire value. So equals this times this, and it'll just be so, and then single contract is this divided by 100, and our single contract stock value. I'm coming somewhere with this, okay? So if you have a $10,000 portfolio, the maximum that the stock can be worth and it not be too much of your portfolio is for you to sell a call that is $5. So the value of the stock has to be under $5. With $50,000, it has to be a $25 stock or less. With $100,000, it's $50. With $200,000 portfolio, it's $100 stock. $500,000, it's $250. And with $1 million, it's $500. Okay. Well, can we, like, what do you want to be in? Do you want to be in, like, Meta? Okay. Well, Meta is a $633 stock. Like, you cannot be in Meta and have it be an in-proportionate amount of risk in your portfolio and have less than $1 million in your portfolio. So as your portfolio gets bigger, it makes less and less sense to use these cover call ETFs, but the cover call ETFs let you have like cover call, like contract exposure in an amount that makes sense in your portfolio. So I like cover call ETFs because I am not that intimately aware of the price movements of every stock that I'm interested in. And like, you don't have to be in Meta. You can be in AMDL. You can be in the leveraged version, which is more reasonably priced. However, this is a 2x leverage, so you get the risk. So it, like, basically, because you don't have as much money, you're forced, if you're trying to do a options wheel, into more risky trades, which have a greater risk of you losing all of your money. So to me, having the majority of my cover call strategy in cover call ETFs, hopefully ones that appreciate over time. I like the basket of funds now more than the single stock bets. And so, except for strategy, which is like, I'm out of control with that, and I recognize that. But I think, it lets me concentrate on the ones that I do want to have in my portfolio. And honestly, I should probably not just do strategy related options wheels. I should choose other things, and basically with the diversification and variety, doing my own cover calls would be less risky. But to me, not every stock that's out there that's popular to swing trade and do options on, I don't feel like they are really good for options trading in general. And I know that, well, if I'm just doing the options wheel on, like, I'm doing a $900, $950, $1,000 bet, and it's just straight up, Hold on, I think I need to take this. Sorry about that. So basically, I'm more aggressive with these being in the money or at the money because these are just straight option wheels where I can, if I lose the bet, I get Misty. And getting stuck in Misty isn't that big a deal because it has like an 80% distribution. So the worst case is I'm selling cover calls on it and the price keeps going down and I keep getting a big distribution every week and I'm making premium on the cover call, which I like Misty still, even with everything that's going on, but that's besides the point. So I know intellectually that I should diversify my holdings with cover calls, but I feel more comfortable with strategy, just as someone that's been following how it moves over time. So that's why, for the moment, I do have a lot of different cover call strategies because they're doing more complex strategies than I'm comfortable employing myself. It's not that I'm not capable of learning them. I just not personally comfortable with it, which is fine. These exist. I can pay them a fee and they'll do it for me. So the goal is still, well, there's many goals going on because that's what I am. It's what I do. But I want to keep my margin account at around $90,000, $100,000. I want to transfer MVYY PLTW to the leverage trash account. And then I'm going to start, because we have 100 shares of YMAX. As soon as KYLD is not 100% margin maintenance, I might start making that into 100 shares. There's other things like QQQI or other ones I'm looking into that are diversified high income ETFs that are a basket of stocks of things that I want to be in, but none of those will be more than like 1% of this entire portfolio, and that way we have diversification in this portfolio of things that I have conviction on, and also somewhat stable, hopefully, for a downturn. So I'll keep you all informed about what I'm working on after I get like my blocks up to 100 shares. But I'm still investing in KGLD. I still think that having about 30% of my portfolio in gold is a good thing for me for this portfolio, just to keep it on an even keel. I know that Roundhill just came out with 2 new gold funds, and I might have like 0.5%, like less than 1% in those, because those are also leveraged and we're trying to like not have leverage in this account. What I'm saying is I'm building this account up to hopefully be stable over time, while also trying to de-risk it with having my separate leverage trash account that is more of like speculative things going on. And overall, I do still need to make enough money to be able to pay all my bills. And so I think we're doing good. I did a lot of options trades today. I got out of some of my inverses or sold a little bit of the inverses because they were more than 10% of my portfolio. And we're getting into the things that I want to be in, because I don't want to be over leveraged in gold as I'm trying to form my portfolio to have all the allocations that I want. So that's why I started to buy blocks and things like that. Anyways, what do you think about doing your own versus having it into these high income ETFs? Personally, as I mature as a person that's covering these, I I am leaning towards not the single stock ones, but the ones that, like a YMag or Maggie or Blocks and any of these, even KQQQ if you wanted to do that, like things that consist of stocks that are too expensive for me to do my own options on for the moment, that are actually have good fundamentals and maybe are not trying to maximize the 100%, this is the most premium that you can get, and just have it be, well, you're getting a reasonable amount of price appreciation that's a little bit capped because, sometimes these things do run up, but you get your premium and you get some price appreciation. So, anyways, I just wanted to thank Russell Mahoney, Paulette Pierre, Scott Behringer, Michael Holliday, Shane O'Mac, Bill Bryant, Patrick Spalding, BGP Automotive, In My Opinion, Jetta, and Omega Werewolf X for being members and making your bad financial decisions together with me. You're really helping this channel and, me doing this channel and YieldMight full time. So thank you so much. And speaking of YieldMight, I did not add any new features last night, but I did add like 34 new funds to this. So now you'll see things like XLEI and XLKI. A lot of these X ones from SSGA are new. I did add Devo to this. I really thought that was like a DGRO or SCHD stock. So someone asked me the other day to make a video specifically about Devo. And so I don't even know where it is right now. Hold on. But we have our search. And we do Devo. And it's here. So it's in week 4. And I have added all of their distributions up to now. And so, yeah. What do you all think about the whole buying your own versus doing your own options? And I'll talk to y'all later. Bye.